16 May 2023, Tuesday, MAO with Cal once again. Now, Michael Burry is buying. Why? Interesting. He's buying, and in fact, he's buying Chinese stocks right now. And the thing is this, while he is buying, BlackRock is actually selling. So this is very interesting because BlackRock is actually not selling, pardon me, it is shorting the market. So what do you think? Do you think that he's going to be right, or will BlackRock be right? And the thing is, this bank has started to tighten. And if banks tighten, what will happen very soon? All this information will be shared with you down the road. All right, so let's go. Disclaimer apply as usual, and thank you, Ames, for the kind sponsorship. All right, first of all, guys, we're going to hit the 1,000 mark itself. We are now basically at 988, 12 more to go, guys. All you need to do is just basically share, like, forward this YouTube channel and let your friends come in, because as more and more the market move, I believe that my videos will get more and more interesting. All right, so quickly now, get your friends to like, subscribe to my channel. Thank you. All right, so 190 people are already testing out my TWB crazy system. In fact, the numbers is going up still. All right, you can see that people really likes it. Look at the testimony given by the students. You can see that it's really a highly profitable tool. And of course, now it's stand out because of the friendly interface and customization options. And pretty cool is that we are updating it every single day, every day, 2 sessions, two Facebook sessions, so that keep you guys on your toes, right? So of course, you can see that we are really helping a lot of students, even though they can be in Indonesia, it doesn't matter. We are helping them as and when. All right, so join us, contact us through Facebook. We'll get back to you shortly. All right, let's recap what happened last night. Well, the Dow Jones recovered 47 points and the Nasdaq up by 73 points and the S&P up by 12. Now, basically, well, we don't see much movement on Microsoft, Google, and Apple, but Meta up by 2% yesterday. And of course, NVIDIA continue to go higher because now the AI story is really selling like hotcake, yeah? The thing is this, that I'm very concerned right now is Tesla. All right, so Tesla, in my opinion itself, right, should be more downside to go. I'll show you the technical chart very shortly. But the thing is this right now, right, the market now is watching this very closely because now everyone is waiting for the Federal Reserve, the chairman, Michael Barr, to go before the House of Financial Services Committee today to talk about the current prudential regulators, all right? And of course, we have a lot of this Fed president like Raphael, John Williams, Austin, they are all going to appear at the event, and of course they're going to be interviewed and question about the current situation. And of course, most of the Fed presidents, they are pretty more to the hawkish side, so let's see how it goes. All right, we also have a tranche of this consumer staples reporting this week, and more important thing is right now, right, the market is asking the big question, what's going to happen next, right? I'll tell you more through the technical side. So look at Tesla, right? This is Tesla share at the moment right now, and I don't really like the extension of movement. Now, I remember telling you at 174 is a very important technical point for Tesla, and we can see that Tesla did try to break above it 2 days ago, but it failed to stay above, and now seemingly is coming down. So based on what I'm seeing, unless there's a new big earnings from somewhere, if not, right, I still think Tesla is going to hit the 142 marker, all right? So to me, if Tesla do come off, we do expect some profit taking from the Nasdaq. In fact, I've shared with you guys, I'm pretty bearish with Nasdaq, even though it's climbing now every single other day. But I think that at this point right now, at 14,000, it's kind of high at the moment, if you ask me, right? 13,400, yeah, if you ask me. All right. So the thing is this, the market is definitely watching and waiting for this to happen, but you can see pretty clear that McCarthy is definitely not in the mood to listen to Biden. In fact, so McCarthy says that the White House isn't being serious, while Biden, as usual, is optimistic about a debt limit deal. So to me, it's if McCarthy doesn't really come out, doesn't really accept, this deal will not go through. So it's very clear that, right, something sweet must be on the table before anything can happen. Now, the thing is this, we all know that right now, right, the shrinking debt ceiling window has really make the market on the edge. And Janet Yellen reiterated that the June warning. In fact, she reiterated to lawmakers that her department's ability to avoid breaching the statutory debt ceiling via special accounting maneuver can be exhausted around then. So which means that, right, if they can try to play around the numbers, but the maximum they can stretch is by this June, early first week of June. And if they say it still doesn't go through, then we have a bit of a problem right now. And of course, now the financial market is all waiting. Now, the thing is this, people ask, what if there is a way they can go around it? Will the stock market recover? Well, of course, if they find a way to really do it right, the market may recover and may go to a new high. But the thing is that right now, at the moment, it seems like a bit difficult, right? So what we can see is that this is an X-day estimate by different banks, from Deutsche Bank to Morgan Stanley, Goldman Sachs, and so forth. And looking through, majority of them expect that there will be a way that they'll find a way to, push it up and get it done over it. But most of them are not expecting it to be done too soon. In fact, most of them are looking at late June or even early July. So you can read it on your own, but clearly says that, right, the banks are not that optimistic, if you ask me. So at the moment now, the rising cost of insuring US debt against non-payment, the CDS, credit default swap, has shot all the way. You can take a look right now. Back then in 2007, even back then it was so bad, it was like only like 50. Sorry, it's about maybe like say 80 to the buck, but now we are at 150 to 160 area. So all I can say is this is getting a bit scary right now. Hopefully this can go off, but of course, if US really doesn't get their act right, things can get very, very nasty. So you can see right now the cash balance remains very precarious. As you can see, it's going down very fast. They're spending about nearly about basically $50 billion to $100 billion per week itself. So if whatever is left over now is really not enough to cover by the first week of June. Yeah. So we're watching this very, very closely. Now, while all these things happen, right, interesting, Michael Burry actually went in to buy First Republic, PacWest, and other embedded lenders. But take note on thing, this one is based on his first quarter report. Maybe he has sold off, yeah, so I must be very careful with this article. So apparently, according to his F13F filing, he basically say he bought actually quite a fair bit, all right? He bought Wells Fargo, Capital One, and in fact, you must really understand this. He bought into First Republic, Pacific Western, and stuff like that. So why he buy it, not too sure. But just to re-emphasize what I just said again, it's worth emphasizing that SEC filing shows his holding as of March 31st, but today itself is 16th of May. So he may have exited the position over the past 6 weeks. So just take note of that. Don't just literally copy his homework, because maybe he had already bought it before the problem, and now he may have got out before the thing happened. We don't know. All right. So all this thing is something that we can share with you, but at the end of the day, we are not too sure what is he really holding at the moment right now. But of course, we do know that he has been buying stocks. In fact, right, he basically bought from 9 stocks to 21, and it flew 130% increase in the value of the US stocks portfolio to $107 million. So of course, we all know that Michael Burry has been issuing all the diet warnings, green prediction, but recently he seemed to have backtracked, and now he did ever tweet that he was wrong to say sell. So seemingly this Michael Burry is on the buy side right now. Well, we don't know the exact thing, because he may be buying stocks, but maybe shorting the futures or shorting the indexes. Not too sure. We really know it when things happen. Yeah. All right. So Michael Burry additionally is doubling his stake in Alibaba and Jingdong.com. Yeah. In fact, right, he has bought quite a fair bit. The stock has become the largest holding of his asset management company, about 20%. So we all know that a lot of Chinese stocks have came off recently, and the US side seemingly are not very comfortable. And they've been telling people not to get involved with the Chinese stocks, all right? That's why you see a lot of stocks are heading down to the south side because of what happened. It's more political. And you can see from here itself, right, from his personal portfolio, you can see that he really added quite a fair bit, the 13F filing. So, excuse me. So at the moment now, he's holding a lot of JD.com and Alibaba. Interesting. Now, the thing is this, we all know that the China economic data disappointed us, all right? Apparently, even though there's some recovery, but the industrial production actually rose 5.6% compared to 10.9% expected by economists. That's very, very far. And of course, the thing is that retail sales, although he went up by 18.4%, is still lower than the 21%. Now, do note, these analysts, they may actually put it way, way too high to make the numbers, even though it's 18 is so good, but they just purposely make it so high that it's hard to reach a bar. So again, there's a lot of propaganda here. And of course, the fixed asset investment rose by 4.7%, although the expected was 5.5%. So it seems that whatever that the expected numbers are pretty high if you talk about the country standard, but of course, it's way too high for the country to get it. And of course, at the moment now, right, the Caixin China General Manufacturing Purchasing Index has fell to 49.5. This is something very important, because 50 is actually a very, very important level. And of course, if you stay below 50 for too long, okay, means that there's a contraction of the economy. So that now it's the first time, the first month in 3 months, yeah? Okay, and then of course, the National Bureau of Statistics Manufacturing PMI also fall by 49.2, again, below the 50 mark. So all these actually has a pretty good interesting fact that we had to be very careful. But the thing is BlackRock is shorting. That's why BlackRock is shorting. He showed Agriculture Bank, Aluminum Corporation, Anhui, this is Cement and Beijing Capital, Bilibili. Now, they've been shorting all these Chinese shares, okay? Now, the thing is that we all know BlackRock is like a little bit like how, like a bit of foreign, like local sovereign fund, right? They actually have the money, they have trillions of dollars, then they can actually really maneuver or influence the market. So maybe through this itself, right, that's why China A50 shares, Shanghai shares are not able to go up, because BlackRock have been shorting non-stop. So of course, the thing is this, if you look at the composite index right now, you can see that it's staying above the MA 200. That is still pretty positive. And if you look at the high, it was back all the way to 5,200 back then. Where we are right now is 3,300. So it's still a bit of room there. So if let's say we believe in Michael Burry and he actually has the knack of seeing things differently, who knows? He's looking at the market to go back up again. Now, based on what we are seeing right now on the chart, we can see that it's a very strong resistance at 3750, right? That is a very strong resistance. But we have an uplifting base right now. The base is getting higher, and by staying above the MA 200, that means that the market is okay. And of course, look, the volume recently has been pretty healthy. So if you would ask me, I think that if there's going to be any recession coming from US side, and if China market do come down a little bit, like come down to 3,000, I think that'll be a very good time to buy some Chinese shares. So if you ask me, that's how I feel it at the moment right now. 3,000 will be a good buy if you ask me, okay? All right, so the thing is this, let's look at BlackRock itself. Now, BlackRock not only shorting the Chinese shares, they also bought a lot of these technology companies, especially Apple, all right? They basically increased it by 0.8%. And of course, the thing is this, what are they buying? Take a look. So they bought in more Apple, more Microsoft, more Amazon, more NVIDIA, more Google, Tesla. So in fact, so simply put, the reason why the stock market has been holding is because BlackRock been buying. So the thing is, we all know that these companies, the one that I just mentioned, all these have very strong, heavy weightage on S&P 500. So as long as they are buying, all right, increasing to as much as 6% ownership, we are not going to be half surprised the market will stay up. But of course, interestingly, they actually let go Berkshire Hathaway, they let go this Exxon, they let go some companies that's like in the finance side, basically put a question mark here itself. So unless they are very positive that the technology companies will do well, or because they know that they are being asked to actually maintain and hold the market. All right, but of course, let's focus on Apple right now. Apple versus the world. In fact, the iPhone maker is bigger than almost any stock market in the world, almost, yeah? All right, so the thing is this, look at BlackRock itself first. Well, if you look at it, this company, even though they've been buying so many shares and been holding this, but their share price has been coming down. So I think that 620 is a very important base for BlackRock. If it doesn't stay above 620, then coming down to 573 is really possible, yeah? So the stock that behave in this way, I just cannot see why I can trust their portfolio itself, all right? So we all know that Apple is bigger than the whole market for the small cap, right? So let's take a look. Apparently now, if you actually look at Apple valuation against Russell 2000, it shows that Apple is actually, the market cap itself is larger. It's $2.714 trillion based on Monday's numbers. Now that's bigger than the combined market cap of 2,000 stock in the small cap focus Russell 2000, which has 2.208 trillion. So it's like, wow. There's a lot of difference, right? So if you look at it, you can see that the Apple has really incredible run. They did pull back recently, almost to the 2 trillion mark, but again, a good solid earnings have brought it up back again at above the $2.5 trillion base. So the thing is this right now, is it a sign that this is overdone, or is it because that means that Apple can go even to the 3 trillion mark in the time to come? Well, I'm not too sure, but I know that if there's going to be any good pullback on Apple, I'll definitely be buying. All right, so you can see Apple share right now very clearly is really trading way stronger than S&P 500 and the Russell. So that means that the Apple itself is really leading the whole show. Now, if you look at the Apple chart, right, I just have my reservation because you can take a look right now. Now, Apple basically has, this is one period where the RSI was the high, second period, then we third period. Okay, so now watch this, guys. You look at it, right, each wave itself got actually lower. But of course, after recent move here where the market actually broke the so-called previous cycle, that's why it propelled it back to this point. That's why the market is so strong recently. And now the thing is this, Apple, if you really want to continue to go higher, it must stay above 176. All right, with the closing at 172, we are $4 away. Is it possible? It is possible. But if you look at the thing is that when the market is consolidating at the top, right, the market cannot break the trend because it ever happened before back here and the market pulls back down. Similarly, when the market goes above here, it pulls back down. So where we are having right now, it is very possible. But because where it is right now to the moving average, right, is quite far away. So it may repeat something like this if you ask me. That was back in last year, April. So a pullback on this Apple will bring it down to 157 if you'd ask. Right, so let's see whether what I say will be true. All right, of course, if Apple pulls back, generally the whole market will pull back. Yeah, this is something that we cannot avoid. All right, so let's talk about something to the fundamental side. So this is the credit spread waiting to explode. Yeah, this is really the US high yield index options, and you can see that every time when this index goes about 7, that is where you will have your recession. Yeah, so of course where we are right now, we are nowhere near to 7, but again we are not too far away at 4.74. A bit more to go, we'll hit the 7 mark, and I strongly believe that that will likely be happening in August. Okay, August to September period. Okay, this is my personal take on what may happen in the near term. All right, so if you take this chart right now and inverse it with the Dow Jones, you can see that, right, inverse, you can see that, right, it is incredible that it always seems to be able to forecast the market. The one in orange or the one in yellow, orange is actually the US S&P 500. So now the thing is this, as you can see right now, as the price to Dow go up, right, so was the spread, okay? Now the thing is this, now we have a bit of issue because you look at it right now, the Dow Jones and the spread, right, is actually opening up. So when it opens up, right, it's not a good sign because in the past we've seen it before when you have the stock market, okay, stock market going upwards, all right, like this, and then the spread actually going downwards, right, like a negative divergence, then of course what happened next, the stock market will really sell. So if you ask me, right, I think the stock market is already preparing to come off once the sign or signal or the catalyst to present itself. So I can tell you this, guys, be very careful because we're not too far away. Then with the bank lending now, you can see every time when we have the bank lending basically tighten up itself, right, you can also see that the spread also hits the low end. So now we can see very clearly that usually they go in tandem. That means that if the thing is down, both will be down and so forth. All right, but now we have a big issue. We are not actually having this. And it's not because the market is good, but because at the moment now, market is still trying to kick the can down the alley and hope that things will turn better. But of course, if things doesn't turn any better, except to nosedive, then of course, we can see some scary time ahead. So two sides of it, some people are saying that, okay, maybe that's the end of the inflation curve. Let us now buy in the stock market. It is very possible. But you ask me, right, it's very difficult for the inflation to come down now. It's always at 5% to go to 2%. You need at least 3% of downside. And of course, we also need to have the interest rate going higher. But of course, we all know that the interest rate is killing the banks. So no matter how it is, right, I don't think that we will be able to walk out of this recession. All right, so you can see now the banks are really tightening. Lending standard is the fastest ever rate because of the rate hike. And of course, right now it's an SOP that not to really lend money. And so that's the reason why I feel that, right, the stock market is just brewing, waiting to come off. So with that itself, right, you can see the S&P 500 is trying its best to form a interesting diamond shape area like this. And of course, by doing that, we can actually tell you that now the market has a bit of interesting guidance. Now, when it was doing this, amplifying, you can see that the volume pick it up. That is a sign of big movement coming in. But when it comes with the diamond shape and the volume coming down, that means the market is going to go into big time. So the upside itself could be as high as 42 to 4,400. Okay, that is the upside, okay, for the S&P 500. The downside itself, right, the first down will be at 39.50. Okay, and then the next one will be all the way to 38.50. Okay, so the upside and downside are given to you. So let's see how it goes. Some people are betting that after this break of the diamond shape, it will go higher. There's nothing wrong about that. And to me itself, right, this is part of market. But judging from what I'm seeing right now, I think that I'd rather be on the sell side and wait for the market to come. But of course, we are not in the best environment for short, so you just have to take your time, take your money, and then come in and out regularly, yeah, until the real big one come. At the moment now, it's not yet. You can only do is just prepare. Okay. All right. That'll be all for this MAO. I'll see you on the technical side. It's Cal signing off. Bye-bye.